The General Electric number's a little bit weird. It looks like the stock might be down initially on this. There are two lists of earnings per share that we're seeing. The revenue, though, as you can see, is we don't need to worry about whether there's items involved there. That is below expectations. It gets even stranger when the adjusted number that I'm seeing on the wire services is 82 cents a share, but the company is giving an adjusted number of, I mean, I don't have glasses. That looks like a 92 cents a share is what the company says. And I don't know whether it makes a difference since the estimate is for 83 cents. I tend to believe the company on this, unless the adjusted number is in debate as to whether you include some items. But on the news service, it says 82. But GE itself is talking about 92 cents a share, up from 34 cents in the year ago period. Industrial free cash flow, $3.8 billion, and that's down $500 million year over year. Orders down 4% organically, and then, as we said, the industrial organic revenue was also. 20.3 is the overall revenue, but the industrial organic revenue was down 3% year over year. But adjusted operating margins, industrial, 9%. That's up 280 basis points, largely driven by aviation services. It was an 8 for 1, wasn't it, or 1 for 8?
1 for 8.
So if you do, you can do the math on that. It was over 100 for a while after that reverse split, but now you can see. Whether it's responding to the bottom line number, fourth quarter loss, if you use GAAP, it was $3.55. So there's a lot of restructuring and everything else in there for that loss. But you back that out and you get an adjusted number that, according to the company, would be above expectations, although revenue, as we said, is below. But a lot of comments from Larry Culp. Debt reduction means we can further intensify efforts to strengthen operations and play offense. So we'll see. I don't know, no bounce yet in the stock. I got an 89 bid and a 91 ask on that.
They're giving a full year 22 outlook on a new basis because, as you mentioned, there's so many changing things here. On that, they say organic revenues are expected to grow in the high single-digit range. They're looking for adjusted organic profit margin to expand by 150 basis points. They're looking for adjusted earnings per share of 280 to 350. And again, I don't know where the street's going to be on that, or if they're looking at the new basis versus the old basis. Also, free cash flow of $5.5 billion to $6.5 billion. But yeah, none of that seems to be helping on the stock lines.
Shepard Smith here. Thanks for watching CNBC on YouTube.